Today, we find ourselves in a situation where approximately 70 million people are receiving Social Security benefits, and shockingly, about half of them, which amounts to 35 million individuals, are burdened with the added weight of paying taxes on their Social Security income. This scenario feels inherently unjust, because Social Security is essentially a system where we pay into it throughout our working lives, only to later face taxation on the benefits we've contributed to. To make matters even more perplexing, this issue has been recognized by some members of Congress, leading to ongoing efforts to eliminate these taxes. This endeavor to rectify the tax situation has a noteworthy history. The initial bill aiming to eliminate these taxes was introduced back in 2003, when Congress first acknowledged the unfairness of the system. Since then, the bill has been reintroduced in 2012 and every year thereafter, gaining momentum among congressmen dedicated to erasing this tax burden. To fully understand the implications of this legislation, we must first grasp the mechanics of our current tax system for those receiving Social Security benefits. Before delving into the bill's specifics, let's clarify how the present system works for those millions who find themselves paying Social Security taxes. For nearly 5 decades, recipients of Social Security income didn't have to report or pay taxes on these funds. However, beginning in 1985, a change in legislation meant that, for almost 40 years now, people have had to pay income taxes on their Social Security benefits. The crux of the issue lies in determining how much of this income is taxable. To calculate this taxable portion, the IRS employs a formula known as provisional income. Before 1986, this figure was consistently 0, which is what many would prefer to see. However, presently this number varies, forcing some individuals to report a portion of their Social Security income as taxable. The aim of the proposed legislation is to change this situation, allowing everyone receiving Social Security benefits to place a 0 in the taxable amount line 6B, of their tax forms. Let's delve deeper into the existing tax system. Your provisional income, the key to determining how much of your Social Security income is taxable, is computed using a formula. Provisional income consists of all your gross income, which encompasses everything reported for tax purposes, along with any tax-exempt interest. Tax-exempt interest typically pertains to those who invest in municipal bonds, as they don't pay federal taxes on this income but must still report it. Notably, provisional income does not include Social Security itself. Instead, it involves taking 50% of your Social Security benefit and adding it to your other sources of income. Once you've determined your provisional income, you apply it to specific thresholds based on your tax filing status, whether you're a single filer or a married couple filing jointly. For single filers with provisional incomes of $25,000 or less, none of their Social Security income is taxable. If their provisional income falls between $25,000 and $34,000, 50% of their Social Security is subject to taxation. Beyond $34,000, 85% becomes taxable. Married couples have different thresholds. However, what we aim to achieve with this legislation is the elimination of these provisional income calculations. The goal is to return to the days before the tax on Social Security income was introduced and ensure that Social Security income remains tax-free. Now let's take a closer look at the legislation itself and the impact it could have if passed. Interestingly, the history of this legislation dates back to 2003, when Congressman Ron Paul first attempted to eliminate taxes on Social Security benefits. While his effort was unsuccessful, subsequent congressmen, such as Congressman Webster from Florida and Congressman Massey from Kentucky, have been tirelessly championing this cause since 2012, reintroducing the legislation year after year. The bill, aptly named the Senior Citizens Tax Elimination Act, seeks to amend the Internal Revenue Code of 1986 to terminate the inclusion of Tier 1 railroad retirement benefits and Social Security benefits in an individual's gross income. This change would effectively place a 0 on line 6B, ensuring that no Social Security income is reported as taxable. The legislation promises significant tax relief for seniors, putting an end to the double taxation of their federally earned benefits. The bill has garnered support from a substantial number of congressmen, with 25 co-sponsors, indicating substantial momentum. In the words of Congressman Webster, "Seniors have paid into Social Security with their tax dollars for decades. Now, when many seniors are on fixed incomes and struggling financially, They're being double taxed because of income taxes on their Social Security benefits. This is wrong. The history of this tax issue is indeed perplexing. Prior to 1984, Social Security benefits were exempt from federal income taxes. However, Congress enacted legislation to tax a portion of these benefits, with the taxed portion gradually increasing as a person's income surpassed specified thresholds. This, as we've discussed, is the heart of the matter, taxing benefits that have already been taxed as income during one's working years. In the words of Congressman Massey, "My bill would exempt Social Security retirement benefits from taxation and boost the retirement income of millions of older Americans." AMAC, a prominent advocacy organization, also voiced its support for the bill, emphasizing the injustice of taxing benefits generated from already taxed funds. While we hope for the passage of this legislation to end the double taxation of Social Security benefits, we must navigate the present tax system. For those currently above the income thresholds, there are options for managing your tax liability. You can choose to pay quarterly estimated taxes or settle your tax bill at the end of the year. Additionally, there's the option of using IRS Form W-4V, which allows for voluntary withholding, letting you specify the percentage of federal income tax you want withheld from your Social Security benefits. This method helps distribute the tax liability evenly throughout the year. In conclusion, the issue of double taxation on Social Security benefits is a matter of concern for millions of Americans. While efforts are underway in Congress to eliminate this burden through the Senior Citizens Tax Elimination Act, it's crucial to stay informed and engage with your representatives to support this legislation. Until then, you have options for managing your tax liability, including voluntary withholding using Form W-4V. The ultimate goal is to ensure that seniors can enjoy the full benefits of their hard-earned contributions to Social Security without the burden of double taxation.